All right, folks. Welcome. Welcome. Come on in. Come on through. Going to start immediately today. Students, as you come in, just let me know in the comment section that you're in. Everybody else, you are still welcome. We're great to have you. There is a place in what we do at Israel Keys Wealth Academy for you. We want to give you some stuff for free with which you can get your trading career or trading life or activity or whatever word you want to call it, hobby, up and running. Right. So, 1 second. Let's just see if I can get my screen shared. By the way, please do like, share, comment, and subscribe. It helps us. We're trying to build a channel now. This channel started out primarily as just a holding place for content for our students. It's only over the last month or so that we thought, you know what, we might as well build a YouTube channel that is a blessing to everybody else. And so every like, every share, every subscription, every comment helps us in growing our base and just being an asset to everybody out there who wants to take their trading to the next level. So on Monday, I started out with this market sessions, when to trade. Please go watch that video. It is on this channel. It's also, the link to that video is in the description of this particular video because it lays a great foundation for today. So we talked about the 4 different sessions on Monday: Sydney, Asia, aka Tokyo, London, and New York. And some of you may think, well, I've heard all this before, I've read about it before, you know, I've been on, I don't know, whatever sites you've been on, FX Street, Baby Pips, I know all this. Well, you will find stuff you won't find anywhere else, because rather than just giving you bug standard generic information, we are giving you some slightly more nuanced insight here. And as we go through the different parts of this mini series, the nuance will get even deeper. And so I've had a couple of private messages from some very experienced traders telling me that they learned some stuff from that first video that even they did not know. And that was just the foundation, laying out the 4 sessions, how they work, what they are, why they are, the times they are, and what to do with each on a very generic level. Today, we're going to focus on Sydney and Asia with a little bit more precision. And to do that, welcome everybody. Just let me know when you get in the comment section. And so to do that, I am going to use a chart. So last Monday was strictly off a slide because we were just laying the foundation. Now we are going to take it to another level, right? So let me see what I can do with this. Okay, nope. Let's see. Okay, I don't have that template on this particular computer. That is fine. We will just go plain and I will build it from scratch. So for those of you who were not on Monday, let's just go through a real quick 1 second recap. Real quick. Right. So we talked about what the sessions are, why there are different trading sessions, major sessions, the fact that the people who trade the markets institutionally do it for a living. So they work 9 to 5. And so wherever the most amount of trading goes on in the world, the 9 to 5 times of the people in that geographical location will become a major session. Therefore, Sydney, which covers the whole of Oceania, New Zealand, and the South Pacific Islands, and Australia. You have Tokyo, quote unquote, but Tokyo really covers the whole of Asia. So you have Hong Kong, Singapore, China, all the way down to Malaysia and all that stuff. You've got London, which covers the whole of Europe, and New York, which covers the whole of the Americas pretty much. These are the amounts of trading. So basically between just the bottom 3, Tokyo, London, and New York, we have 83% of all trading volume. We looked at the fact that we need to understand time zones, because when it's my time, it's 11. What's the time here? It's roughly about 11:07 here. It'll be 6:07 in New York. It'll be about 8 p.m. in Tokyo and all that kind of stuff. And so we need to understand what these time zones are and how to check them to your time zone. Right. Next, we looked at the fact that we specifically want to know what the time is in London and New York. These are the 2 major sessions, the 2 largest sessions and centers. They're the ones that really govern the flow of the market on most pairs. And you want to know when they're starting and when they're ending and when they're on their break. Why? Because as you see in the next few videos, certain things happen in each of these sessions that are critical for the whole of the Forex world. So we looked at Sydney. Sydney starts at 8 a.m. in Auckland, which is New Zealand. That's 6 a.m. in Sydney. That's 8 p.m. GMT. So from 8 to 5 at GMT. In London this time of the year, that will be 9 p.m. to 6 a.m. This is the Sydney session. We looked at the fact that pretty much whatever pair you're trading, you really don't want to be trading Sydney. If you are a speculator, a retail trader, if you're trading the Forex markets to get profit, not because you need to transfer money from one country to another. Excuse me, as I'm going to show you in a second, just stay away from Sydney. Use it as a barometer for the rest of the day. And then we looked at Tokyo or Asia, 9 a.m. Tokyo to 6 p.m. That's 12 midnight to 9 a.m. at GMT. And we looked at the fact that, again, unless you're trading a pair with an Asian or oceanic pair, this is the rule of thumb. This is the rule of thumb. You want to trade a pair only at the times when one of the currencies in the pair's home country is awake and within office hours. I probably should write that down for you. Let's see. Duplicate the slide real quick. Only trade a pair during the session times where at least one or both of the currencies in the pair is, in bracket R, in office hours. Makes sense. If the institutional traders driving the market are asleep, why would you want to trade that pair? It's just simple. The answer is you wouldn't. So that is extremely important. 1 second. I think I should actually blow that up. Make it bigger for you to see. Cool. So with that being said, let's look at Asia and Sydney real quick. Let's get down to it. Righty-hoo. Oh, now I'm going to throw in a pair of indicators. They're not mine. The names will show you they're not mine. Like I told you, they belong to a former mentor of mine, trader who I still have a lot of respect for. But when I first started my journey of becoming successful, I've been trading far long before I met him. And I'd had a lot of experience and a lot of other trainers, and I had a lot of head knowledge. And I probably could have been teaching prior to meeting him, but I wasn't successfully trading myself. I knew everything, or I knew a lot of stuff, but had very little success. He laid the foundation for a lot of my understanding of price action. For that, I'm very grateful. I have taken a lot of that stuff and fine-tuned it, refined it, taken it to the next level for myself and my students, but honor and credit go where they are due. So I'm going to use a couple of his indicators, which I got for free. So nothing special about them in terms of the fact that they're mine. They're not. Now, the first is something called the CBDR, and I'm going to show you that in a second. First of all, I'm going to put it in blue. Not navy, blue. And I'm going to give it these times. Now, my server is currently 2 hours ahead of GMT. That's important to note when you see what I'm doing. So my server is currently 2 hours in front of GMT. So when I pull out this range here, my chart, I'm going to drop down the 50-minute chart so you can see it. That's from 8 p.m. server time to midnight server time, because this indicator cannot cross a daily barrier. I'm going to have to put it again on the other side. Just let me know you guys can hear me loud and clear for the record. I'm going to put it in again on the other side of that line, because what I really wanted to cover is a period from 8 p.m. server time to 2 a.m. server time. Very important. So you'll see that it's basically on either side. In essence, this entire range here, from here to here on this day, and from here to here on this day. This entire range here is something we call in the Forex markets. Again, these are not my terms. I didn't create them. When I create something or refine it, I'll let you know. When I use it as given, I will give credit by letting you know it's not mine. So CBDR, which in layman's terms, central bank dealing range. Now, you remember I showed you on Monday that roughly about midnight London time, you will see some wild spreads. In our private student section last night, I showed you that the spread was about 9 pips on the euro dollar. Now, that was me trading an account that's a zero spread account, meaning my pips are usually between half a pip and 1 pip. If a currency that's usually between half a pip and 1 pip is at a 9 pip spread, tells you that something's going on. Well, if you remember, let's go back to this here. Sydney session starts at 8 p.m. GMT. 8 p.m. GMT. That would be 10 p.m. by my broker's server time. In essence, this central bank dealing range that I have drawn out here starts 2 hours before the Sydney session. Why is that important? Well, students, you remember this. Let's go a bit further. So we keep shouting, get your charts. What time? 6 a.m. to 10 a.m. in the morning. Well, the London session starts at 8 a.m. London time. So 6 a.m. is 2 hours before the open of the London session. The New York session, sorry, this is, I haven't corrected that yet. It's wrong. The New York session starts, what time of the, what is it now? Daylight saving, let's see. So the time of the year, the New York session would be starting at 1 p.m. So that's New York time at this time of the year, I believe is 1 p.m. Yes, 5 hours is 1 London time. Well, what is 2 hours before 1 p.m. London time? The answer would be 11 a.m. We're going to come to that in the next 1 or 2 videos. But 2 hours before every session begins is what starts the period we refer to in the markets as the open. So if the session starts at 8 a.m., 2 hours before, you want to be staring at your charts. Because, like I told you guys, the guys who trade the markets for a living are wild creatures. They hardly have any sleep. They're paid to trade long hours. And so 2 hours before everybody else gets to work at 8 a.m., the London guys will be at their desks at 6 a.m. stalking and checking and seeing what's going to go on for the rest of the day. And so 2 hours before Sydney begins, the market will go into a contraction phase. Pretty much every day, except with the very, very extreme exceptions on some days where you have an Asian or an oceanic pair. But even they, during Sydney, will go into a contraction. Right now, so Sydney starts at 10 p.m. London time. It ends at 7 a.m. London time. But those first, so this would be 10, 8 to 2, those first 6 hours, you do not want to be in the market. Let me say that loud and clear. You do not want to be in the market during this time frame. Pretty much, let's see, Kieran. Japanese traders trading JP were providing liquidity since London sleeping. Well, yes. The Japanese traders would be providing the liquidity. So because at least one, remember, let's go back here. The rule is only trade a pair during the session times where at least one. Both would be nice, but at least one is okay. So if at least one set of traders are in the market at that time, there should be decent enough liquidity for you to get some meat on the bones. You get the best responses when both sets of traders are awake at that time. So, and that works across all sessions, all pairs. That's a general standard rule of Forex. And it's something, sadly, I had to figure out myself. No one ever said that to me. It was, why am I trading a pair if the two sets of institutional traders who trade that pair are asleep or not working? I mean, once you figure it out, it sounds stupidly simple. But I went the first 8 years of my trading career without having figured it out. And so for those of you who are just starting, there you go for free. Enjoy. So, like I said, you want to use Sydney as a range finder. And specifically, one second. And specifically use it for the central bank dealing range. Very important. Now, again, these are free tutorials, free webinars. I'm not going to go into the same level of detail I would for my private students. But this is what you need to know. Everything that happens in the next trading day is determined primarily using this as one of two tools. Just go study your charts, right? I'm not going to do this for you. Like I said, if this is free for you, then you basically spend the amount of time you would, whatever you would pay per month to be a student, convert that into hours on your hourly wage and spend that teaching yourself this. You'll see it. It's not hard, but every day, just mark out the high and low of this central bank dealing range, which is the first 2 hours before Sydney and the first 4 hours of Sydney. I should also say this. The vast majority of the trading in any session will happen within the first 4 hours of that. Okay, let me put that down on the chart. Let me put that down there. That is something significant to show you. All right, duplicate slides. The vast majority of the significant trading during any session will happen in the 6 hours that start from 2 hours before the session officially opens. Rule of thumb: London, New York, Sydney, Asia, same thing. So that first 6 hours that starts from 2 hours before. So in essence, 2 hours before and the first 4 hours from the start, that 6 hour block is pretty much what you need. That's why, for instance, again, to repeat, like I say to you, all you guys, if you're a London trader, get up at 6. That's 2 hours before London opens, 6 a.m. London time. And by 10 p.m., 10 a.m. London time, don't bother entering any more trades. I'm not saying the market won't move any further. I'm saying you pretty much will be chasing price by that point. The start of the significant, okay, thank you, Kieran. Appreciate it. You're right. The majority. Yes, sir. Good looking out. So by 4 hours into a session, just wait for the next session. It'll save your life. Trust me. Right. So going back to the charts. This 6 hour period so 2 hours before the start and then the first 4 hours of Sydney Open, it's called the central bank dealers range. Why? Because market makers, central bank dealers, as the name would imply, right, will be in the market planning what they want to do. That will usually be the centerpiece of price for the day. All the rules we look at, like on an up day, go down, find support, and then go long. On a down day, go up. You'll usually see that price is working around and within that range. Again, I'm not going into far more detail than that today, and not for free, but study it for yourself. You will see it after a while. Do not be a day trader. Do not take an entry during that day without first establishing what the central bank dealers range is. And then using that range, apply many of the rules of thumb. I'm going to leave that there. For instance, also, since it's always a consolidation, you remember the rule that price moves from consolidation to consolidation. When you see a consolidation on any time frame, it's a sign that there is about to be a significant move away from it in one direction or another. Well, if the day starts as a consolidation, look at it, going from one day into the next. And remember, the trading day officially starts when Sydney opens. The trading day officially starts when Sydney opens. So even though your calendar, your broker platform has the dividing line at its midnight time, notice I said the word officially, because I'm going to contradict myself when I come to one of the other sessions next week. But officially, the trading day starts when Sydney opens in Auckland, New Zealand, because those are the first set of traders in that 24-hour period who get to their chart. So you see it starts with a consolidation. If you have a higher time frame understanding of what price is doing across the higher time frame, like I taught you guys on the daily last night in the closed session, you can say, okay, we're headed down from here to here. We've had a consolidation. Price has left that consolidation. What would you expect it to do? Well, come back to pretty much at least the middle part of the consolidation. It's a rule of thumb, isn't it? Same thing here. Now here we have a reversal. So on this day, the central bank dealers range is the consolidation before reversal. Well, it stop hunted to one side. It crosses to the other side. What does it do? It comes back down to the middle. The same rules that apply on any time frame. But now that you have a clearly defined range that repeats every single day with 80% consistency, you can figure out how to use it. So for instance, using yesterday, let's get rid of this one. This was the central bank dealers range yesterday. Again, the first 6 hours that start from 2 hours before Sydney. Well, price comes in, is in a holding pattern, leaves it here, comes back to where? Pretty much the center. Gets an entry and then move. All right, Kieran, nice question. Sydney traders at disadvantage. Well, look at it this way. It's not that they're at a disadvantage. It's that the institutional traders in Sydney don't have enough money in their collective pockets to move price a whole lot. That's it. A small percentage of all institutional trading happens out of Sydney centers. So it's not that they're at a disadvantage. It's that they just don't move the market that much anyway. And so if you live in Sydney, if that's the question you're asking, if you're a retail trader in Sydney, well, yes, you will have to get in sync to get significant moves with another time. But think about this. Even if you are a Sydney trader, you will be awake during Asia, by and large. And so you can trade the Asian pairs. For an example, like I've taught you, if you're going to trade during Asia, never trade during Sydney. If you're going to trade during Asia, find Asian or Oceanic crosses, two currencies that are both awake during Asia. And then you'll have some fun. Because for instance, one second, let me go here. Let me save this as a template so I don't need to repeat it. Save template. Right, so we'll call it IKW CBDR. CBDR bracket only. Cool. So if I now go here, right, so you see that if you're trading Asian or Oceanic crosses, you will have a little bit of meat on the bones. Not as much, but I would still stay away from this. However, where you will really shine is trading the actual Asian range, the Tokyo range that I'm going to come to in a second. I'm going to put this indicator on. Again, that starts at midnight my time. So that's midnight London. That's midnight GMT. So that's 2 a.m. my server time. And 6 hours. Now, during this period, you can see that so Kieran, your question segues nicely. While the Sydney open period, the CBDR, was a consolidation, you can see that for a pair that has two Asian or Oceanic, Asian/Oceanic currencies, the Asian range, the Asian open range will range. It'll trend, sorry. And so a Sydney trader would still be awake at this time. They could take that trade. So if you must trade during Sydney session hours, stay away from the CBDR. Wait till the start of the Asian range, which is about midnight GMT. For the first 5 or 6 hours, find a trade. That's how to trade if you're stuck on Sydney hours. For the rest of us around the world, just wait till London opens. Or if your time schedule means you're awake at night in your country, fine. Trade Asia and trade a pair that has two Asian currencies in it for the best result. Right, so back to this. So pretty much on a crude free level for YouTube, that's how you use the Sydney session. You use it primarily by establishing it as a consolidation and fitting that consolidation into the larger scheme of things. What is price doing on the higher time frame? Where does that consolidation, once it's formed, fit into institutional price action or order flow on a larger time frame? Get a daily bias, meaning what direction. This is something, if you're a day trader or an intra-week trader or swing trader, I've taught you this several times. Before you take a trade, ask yourself, what should the next day, week or month candle look like? So coming into this particular day here, the answer should have been, what do you expect this next day to look like? 10th of August. Well, if you drop down to a day up to a daily chart, let's look at the 9th of August. The 9th of August was here. Actually, there was no 9th of August. That was a weekend. So this is the 10th of August, right? So when we came into the 10th of August here, what should we have expected the next candle to look like? Well, let's see. We have another block sitting just right there. Can you see that? It's another block sitting just right there. If you drop down the 4-hour chart, so that's how it was generated. As you can see on the 4-hour chart, price broke a market structure there. Also created a stop hunt there, sorry, I meant to say. And then broke a market structure to the upside. See that? So it's a classic 1, 2, 3 pattern. Well, if you throw on a Fibonacci extension, you would have first thrown it on from there to there. Let's come back in there. Did it touch the order block? No. Technically, this is the order block, the start of that. Did it touch it? No. Well, what do you expect? It expands again. At this point, you could have been forgiven for thinking it was going to carry on going higher. But once it starts dropping again, your eye should be drawn, as we know, to that intermediate liquidity level right there. Let's get rid of these. To that intermediate liquidity level right there. Why? It is just above the order block range. And it is staring at you in an area of deep discount. Well, what do you know? On the 10th of August, price comes in here and gives you a 4-hour engulfing there. If you drop down to a daily chart, you see it even more clearly. This CBDR period, this Sydney Open session here, was coming into the day of the reversal. This was the day in which price hit the 21.4, or the period hit the 21.4. It has taken out the intermediate liquidity, and we are now in the middle of the order block, roughly. If you're going to have a reaction the next day, if being the key word for now, what would you expect? Let's take this Fibonacci away. If you're going to have a reaction the next day, what would you expect? Well, you would expect price to open up. Here, that's the open of the day. To dip beneath the open of the day to where? Ideally, if we are going to have a reversal and there is a consolidation, what do you expect? A manipulation, CMRTE. Remember, consolidation, manipulation, retracement. Sorry, consolidation, manipulation, expansion, retracement, target. So you have the consolidation, which is the CBDR. the Sydney session, you have the manipulation going one way to take out the stops there, which is the exact reason why that consolidation is there, to trick people into putting their stops on either side. Market maker comes out, clears out the stops there. So takes out the CBDR one way, then takes it out the other way, look, and does what? Comes back to at least the middle of it. So this is your classic consolidation, manipulation, expansion, retracement, and then what are you now looking for? Target. However, this comes at the end of the day. What do you expect to happen at the end of the day? You expect price to go back into the CBDR. So that's fine. But notice on this day, we've already had CM or C consolidation, M manipulation, expansion, and retracement. And so all we're looking for now is the full run to target. Well, when we come back into the next day CBDR, again, you see it holds up there. Would you expect to see this again? Maybe not likely because we've had it once already, but it could have happened. It could have happened a second time, but if it doesn't happen a second time, you don't sweat it because you've seen that already once here. So what does price do? CBDR, it breaks above it, comes back into it halfway, which is roughly the same level as this here, and then runs to target. Same thing as you would do with the consolidation at the start of a week or a month or a year. And so Sydney, for the successful traders, get rid of all this, will 99% of the time be a range finder. You're using it to set yourself up for the next day and to get in sync with what a market maker is doing. Now let's look at Asia or Tokyo. Like I said, on an Asian pair, Asia is simply going to be a normal trading period. If you're trading a pair that has two Asian currencies in it, or one Asian and one oceanic, CMERT indicator of next day directional bias, you infer it from the next day's directional bias. We'll talk about that in the closed forums. Bring that up, if not tonight on Friday or Tuesday's closed forum, or you can just put it on the Telegram group and I'll address it. I'm trying to keep the time today. So if you're trading a currency with two pairs that are either Asian or oceanic, Asia half the time will trend, in which case you can just use it as a normal time period with the CBDR or Sydney session as the forum for it. However, if you are trading non-Asian pairs, which I like to trade, or non-oceanic pairs, then it becomes, in some ways, an extension of Sydney, and a very powerful extension. Now, let's look at this on the chart. 15-minute chart. Scrunch that up. For non-Asian pairs, Asia is just a second consolidation majority of the time. However, it is the consolidation after the market makers have finished messing around with their pre-day order pairing. So you're not going to see the huge spreads during Asia you see during the CBDR or Sydney, because the market makers have decided what to do during Sydney. Asia is where they show their hand. Let me repeat. they've decided what to do during Sydney. Asia is where they show their hand. If you're trading an Asian pair, trade Asia as normal using the CBDR. You don't get any exposés. If you're trading a non-Asian pair, and definitely at least a pair where no more than one currency is Asian or oceanic, you'll see that more often than not, Asia is simply also a consolidation. If Asia ranges, be careful. If you see an Asian range, Asia trend, if you see an Asian range, by Asia, I'm talking about the 6 hours that start from midnight GMT. Now, the Asian session as a complete session runs from midnight to 9 a.m. But I'm only interested with the first 6 hours. I'm only interested with the first 6 hours. Right. So if it trends, don't try use it. If it ranges, it's perfect. Why? Because coming out the CBDR, I want you to look at this. Let's look at a few days back to back where Asia ranged. So here, coming out the CBDR, what happened to Asia? It first went down, then went up. Once London opened, what did London do? It went down. It didn't quite make it to the bottom of Asia, but it definitely cleared the CBDR. And we had a rally. Let's look at the day before. Actually, let me find a ranging piece of price action because we're in a daily consolidation here. So it's going to shift from day to day. Cool. So look at this period of price action from here to here, where there is a clearly established daily bias. There is a clearly established daily bias from there to there. It is clear from the 10th of July to the 30th of July, and even longer, but let's just take that piece. There's a clearly daily bias, bullish. Let's see how you would use Asia in that period of time. I'm going to change this color so you can see the Asian indicator, because at the moment they are the same color. So let's change this to Gainsborough, whatever that means. Cool. So start from the 10th of July, 9th of July, 10th of July. Let's go down a 15-minute chart. Right. So we see the CBDR here, right? It's a consolidation. Let's put that back to the original color. Price comes out of that consolidation into Asia. This is a day in which we are going to see a reversal. Price reaches beneath Asia, finds support where? At a previous liquidity profile from quite a few days ago. Actually, it's this one. One second. It is this one. That is a manipulation block. If you look at it clearly. It starts off as a bearish order block. Price violates it to the upside, comes through it. But you don't need to know that at this point because this is the reversal. So you would not necessarily be trading that day. You would be watching. And you would get on a 1 hour chart a stop hunt from that day's low. You get a market structure break that drove the stop hunt. And from this point onwards, you'd be hunting longs. It's getting on my nerves. Blue because it's intraday. Let's get rid of that. Let's use that. Right. So from this point on, you'd be hunting longs. Oh yes, Kieran, but you're giving stuff away for free, but that's fine. Yeah. Previous Asias and CBDRs are amazing liquidity profiles. Amazing. You'll be surprised how many times price finds support or resistance, the high or low of a day is the Asia or CBDR from a day or two before. Happens all the time. And it's one of the levels you need to have on your chart when you're planning to take an intraday trade. Definitely. So the answer to that is yes. No, it's fine. It's cool. It's cool. It's IKW. We all for the people. Right. So from this point on, you're hunting longs, right? So let's see. Bear in mind, our directional premise here now is what? Bullish. When is it bullish? Till the next time we see a daily engulfing. So starting here, the next time we will consider changing our directional bias is at that level there when price hits that daily engulfing. So from down here to up there on the daily chart, we are only expecting to take long. So for 1, 2, 3, 4 until this 5th day, we're all expecting to take longs. Let's see how we could take those longs now that we have an established directional bias. Well, on day 1 of the bias, CBDR forms. Price breaks out into Asia. Remember, we're expecting an up day. Where does price reach? Beneath the Asian low. To find support where? A previous day liquidity profile. It just so happens in this day to be the CBDR. It's not important that it is the CBDR. That's just a coincidence. And then what does price do? Open, low, high, close. Where does it close into? Into a CBDR. Asia is this is a textbook Asian range. When you see an Asian range that looks like this, you know you have a money maker, because the fact that price was held tightly throughout the overnight period of Asia makes this pattern a far more likely. Again, it reaches beneath the Asian range, find support where? A previous day's liquidity profile here, and then it goes. Again, we come to this day. Now, on this day, it never gets back here. It just comes out of Asia, stays in the middle, and then goes. What happens the day after? There's a reversal. This is telling you something's getting ready to happen. It's not always the next day, but if this happens, I'd be very careful about the next day. Something's getting ready to happen. And what happens the next day? We have a mini reversal. And then the day after, we get back in sync. How do we get back in sync? Stop hunt on a 1 hour chart, market structure break. I can see the 1 hour levels from the 5-minute levels. There they are. Stop hunt, market structure break. We come back into the area on the day after. And what do you know? The pattern resumes. Asia, it's the low of Asia. Remember, it's an up day, so we're not taking an entry above Asia. We're just not. If it's a day where this happens, great. We'll shake the market's hand and say, I missed out on you. But if we have a clear directional bias, we're not taking a trade on the wrong side of Asia, except we're in an Asian pair. So again, it nicks it there, right? On this particular day, it doesn't get back to the bottom of Asia, but it's close. Why is that the case? Because this is here. So Asia itself dipped in to a liquidity profile. So it's reasonable to expect that if the first hourly engulfing you see coming into the day, this is the first hourly engulfing. Even though it doesn't cross Asia, it's dipped back into that same liquidity profile. Well, just put your stop loss there and then you go again. Right? The next day, CBDR Asia goes beneath, rallies. Can you guys see this? Let me know in the comment section if you can see this. It's like magic, isn't it? Boom. Now, this day, Asia does not range or consolidate. Sorry. Asia is clearly trending. Don't attempt to apply it. Something's happened with the market maker that is causing them to allow Asia to range. And what do you know? The next day is a quote, and it's not a full reversal, but the next day is pretty much a down and a sideways day. We come back in here. Again, we don't get to the bottom of Asia, but why? Because of this order block there. So Asia already dipped into the order block. Therefore, when we come back down there, if that is the first hourly engulfing candle of the day after Asia, which it is, we take it. So in essence, if you don't get the pattern that gets to the bottom of Asia and you see your first hourly engulfing candle, you ask yourself, could it be, is there a valid reason for that? On this particular day here, there is no valid reason for it, because here, first of all, it's against the daily bias, but then secondly, here, right? It's against the daily bias. So it's not against the daily bias. So here, it doesn't get back to the bottom of Asia. What liquidity profile from the previous day should have driven this this rise? The answer is nothing obvious. If you go back in time, you see it, but nothing obvious. So that next day, I'm going to be careful. But on this day, it's easily explainable. It comes close to the low of Asia. Why? Because Asia is already in a liquidity profile. So that's fine. The day after, we get back in sync with the pattern. Open, previous day's liquidity profile, bottom of Asia, and then we go again until we reach the reversal. Stop hunt. Market structure break, south. It takes out a daily engulfing. That trend has now temporarily ended, and we've moved into, like I showed you guys yesterday in the evening in a closed forum, we've now moved into another consolidation on a daily chart. So that period of clear directional bias is now ended. And you will see that here, you now have to be careful applying those Asian rules, because we don't any longer have a clear directional bias. And so you see that once that clear directional bias is lost, you can't just apply those Asian rules willy-nilly any longer. That's all I'm willing to show you today. Students, we'll look at this a bit more in the closed forums. Maybe we might post one or two of those closed forums on YouTube, maybe one. But Asia and Tokyo are primarily to be used as range finders. They're consolidation periods that allow you work out in tandem with a higher time frame, direction and bias, what price is really trying to do during that next day, and what you should be expecting it to do, and where you should be expecting it to do it from. And where you should be expecting. Now, of course, if you are trading a pair that has two or one, but definitely two Asian or oceanic currencies in it, then don't try use Asia this way, because Asia is a valid trading period for those pairs. But this is why I like to trade exclusively European and North American pairs. One, I live in a time zone where that works well for me. But then secondly, I get the privilege of using Asia as an extra piece of confirmation. Does that make sense? So I get to use Asia as an extra piece of confirmation. That's why I like sticking with those trades, with those pairs. So for those of you who were with me last night in the student forum, I told you now that the dollar is ranging, I have 6 cross pairs that I'm watching, because the dollar is ranging now, meaning consolidating. Sorry, those consolidating now. I don't want to get stuck with scalping like I have been the last few days. Took my first live loss for quite a few weeks on the EU yesterday, because I took a scalp that I tried to abuse. Take a scalp, keep it as a scalp. I took a scalp I was hoping would, to see if it would extend. I got caught up doing life. By the time I came back to my chart, it had reversed. So I'm trading the 4 non-dollar European and North American pairs, the euro, the pound, the CAD, and the Swissy, against each other over the next few days, at least, until I see the dollar give me a clear directional bias, and then I can get back in sync with EU, GU, and Swissy on the majors, and use Asia as an extra confirming tool. Does that make sense? There's a lot more to it. This is just an introduction. This is beginner's mentorship. It's just an introduction, but it should be enough. Just this alone could take you from 50-50 to a 60 to 7%, 70% win ratio. Whatever strategy you are working with, if your strategy is currently 50-50, just applying what you've learned today could take you from 50-50 to 70-30 just by itself, with nothing else added to your strategy. So watch this video again and again and again. Like, share, comment, and subscribe. See you tomorrow at 11 a.m. Tomorrow we're going to be dealing with London. And the next week, Tuesday morning, we will deal with New York. Gerard, yep. Foreign exchange is both deep and simple. It is both deep and simple. Like I told you in the student forum, it just boggles my mind. You would not allow somebody go on YouTube, watch a few videos for 2 or 3 weeks, and then operate on you as a medical doctor, would you? So I don't understand why people want to jump on YouTube or somebody's online forum, watch a few videos, and invest their pension and start trading live. Start trading live without taking the time to study it deeply. Like I said several times, if you want a quick fix, get rich scheme, I am not the mentor or trainer for you. I will not allow it. I will not sign up to it. Even if you are winning in the early days, I would disavow it. Like I said, if I catch you over leveraging on a live account, even on a demo, but over leveraging and over trading, and you don't take instruction, I'll kick you out of our program. Because it's only a matter of time. You will blow your account. It may be 1, 2, 3, or 4 years, but you will blow it. And when you blow it, I don't want my name attached to you. If you want to learn everything in 1 month, well, okay, go ahead, but it's not likely going to work for you because you need the time and experience, as we've done. For those of you who started about 6 weeks ago now, you see how we've built one concept upon another, little by little, tiny. Get something clearly, go trade with it, get feedback, take a loss on it on a demo account. Why did this concept in this scenario not work? Why? Because there is a second concept that filters it. And as you begin to layer them all, you go from winning 30% of your trades to winning 50 to winning 70. Because each precept, so for instance, order blocks, oh snap, I've just been using stochastics and Bollinger Bands. Now I understand why the Bollinger Band or stochastic or RSI is turning. It's turning because of an order block. Good. So when you start adding order blocks to your strategy, it gives you a heightened level of success. But which order blocks? Where? How? Why? What kind of order blocks? What's a regular order block? What's a manipulation block? What's a rejection block? What is a two-way manipulation? Right? What's a fair value gap? What's a momentum gap? Okay, add them to it. Okay, fine. That takes me from 50 to 60. Why am I still losing 40% of my trades? Well, do you have a directional bias from a higher time frame? How do you find your bias? Okay, great. Now I'm winning 70. Why am I still losing 80? Well, do you know where your key levels are? Monthly, weekly, daily highs, opens, lows, and closes. Do you understand what a stop hunt market structure break is? Okay, that takes me to 75. Why, or 7 or 80? Why are the remaining 20% losses? Well, do you understand fib ranges? Do you understand the concept of premium or discount on a Fibonacci range? Do you know how to draw the Fibonacci range correctly? Do you understand how, while you are in a Fibonacci range on a shorter time span, how to layer it with a higher time span Fibonacci range? And so then you then add this CBDR, Asian range, waiting for, so everything starts to come up or layer on itself one by one. And then even when you have gotten all the principles in place, you still need to deal with your psychology and your emotions. You can know the right thing to do and do the wrong thing because your mind and your emotions play tricks on you. Students, one of the things that I'm really going to work with you guys in private is about developing a wealth mindset. The truth of the matter is, as I close, is Forex is simply a tool to build wealth. If you don't have a wealth mindset, you will reject success in Forex at a subconscious level. It's one of the things that I really had to get to grips with myself. Knowing all this is not useful until I get into a mentality that attracts success. And then Forex becomes a tool of that success. Otherwise, you mess it up psychologically. You pass on trades you should take. You take trades you should pass on. You get frustrated, get into a funk. You say it doesn't work for you. You quit. You see your other friends making it. 6 months later, you're like, I'll try it one more time, and the cycle will continue. But we'll deal with all that as we go along. All right, guys, that's all we get today. I'm trying to keep it short, sharp, sweet, and simple moving forwards. So we're just over an hour. It's been live. Take care. All the best. Please like, share, comment, and subscribe. If you want to find out how you can be a registered student, well, first of all, this is what you have to look forward to. So that's what you have to look forward to as part of our program model. I pretty much swear by it. It's, in my opinion, the best out there for anywhere near the price. What you see on YouTube is pretty much just the VIP. Is part of the VIP mentorship. That's all. It's part of the second pillar, but there's a whole lot more to it. But we've got other stuff. We've got recorded videos and PDFs. We've got a systematic profile or systematic process to deliver the course content to you. And for those of you at the higher level, we've got pretty much a trading community to plug you into. What do we charge for this? Well, because we're crazy, for now, $79.99 a month. We say for now. That will be going up very, very soon. Get in while you can right now. How do you take advantage of it? Well, you send an email to this email address. This is what your weekly schedule is going to look like. I've put live and pre-recorded content for you to work through. Send us an email at that email address. You can also get in touch with us via Telegram and WhatsApp on that number. All right, folks, it's been live. See you 11 a.m. tomorrow for the final session of the week. And registered students, make sure your Telegram is set to show notifications, signals and notifications. All right, take care, everybody. Bye-bye.